honored to be here. I think the topic here is big trends driving the future of commercial real estate. The biggest driver of that is actually happening right here. This is the biggest trend in commercial real estate. These types of events didn't happen 2-3 years ago. The fever pitch around the collision of real estate and tech is happening at a tremendous pace. And the amount of information and thought leadership that's being created to help facilitate those conversations being led first and foremost by CREtech, I think is what is putting our industry on an accelerated path towards achieving a lot of success leveraging this next-gen technology. So really honored to be here talking to you today. I'll try to make this collaborative. We're talking about the future. This is my opinion. I'm sure you guys have a lot of opinions as well. We have a unique insight because we live and breathe this stuff every day. We'll walk through this quickly because we're running short on time, but I'll definitely leave some time at the end to talk because I'd love to get your input. I'll probably use it to make an investment. So we are Fifth Wall. We're reimagining the built world. Let me talk to you about kind of why I think how we got here and what's sort of facilitating this growth. The first is obvious. You guys are all sitting in this room because of it. Real estate's the biggest industry on earth. When Brendan and I were looking at the VC landscape, we were just stupefied by the fact that there was no VC focused exclusively on real estate technology. You have VCs focused on cannabis tech, drone tech, ed tech. I mean, industries that have a far less TAM. We wanted to focus on real estate because it is the biggest industry. And I think it's an important point, more so based on the fact that as sort of technology ceases to be an industry unto itself and just starts to reflect the industries it supports, real estate tech should be the biggest industry on the planet. And I think we'll start to see that happen in the next 5 to 10 years. Tremendous amount of dollars went into VC last year. This number is somewhat bastardized. We'll see it in more detail on the next page. It includes a lot of what most people don't consider real estate tech. A lot of this was driven by SoftBank, their investments in Contero, WeWork, and Compass, but it's still a phenomenal number. The most important point to take away from that is, and what I'd sort of challenge everyone in this room to think about, all VC is R&D. And the best part about it is essentially someone else is funding it for you. I would challenge all of you as real estate owner operators to get on the field. All this money is being spent in your space. You can spend it yourself, but you don't even have to. All these companies are willing to talk to you. In fact, they want to talk to you. So I think having an avenue to pursue that is going to open up opportunities that I don't think you really can even imagine right now, because those conversations breed ideas, and we see this happening all the time, that most people don't think about in their day-to-day. The other question we got asked when we raised this fund, which we found pretty silly, was LPs would ask us, isn't real estate niche real estate tech? No, it's not. $250 billion of enterprise value has been created in this space. Priceline's an $80 billion company. Expedia's $40 billion. WeWork, Airbnb, Zillow. Zillow was a mistake, and that's a $6 billion company. That was a failure. They actually failed in their mission, and they're a $6 billion company. So there's been massive outcomes in this space. The other was sort of this lack of focus and experience. We heard a lot about sort of why different organizations are pursuing different technology strategies. A lot of that's been driven by the fact that, A, there was no real estate VCs, which we talked about. We looked at the GPs at every major generalist VC in Silicon Valley and elsewhere, and we couldn't find one GP that had ever worked in the real estate industry before. I don't know why that is. I think it's just a unique moment in time where now you're starting to see individuals who have real estate experience now starting to explore technology a little bit more. I think that'll change, but as of 2 years ago, that just wasn't the case. And then you also have this issue of corporate VC. Corporate VC historically has underperformed. A lot of that has to do with sort of the internal dynamics and the shortcomings around misalignment of incentives. You're going to see this evolve. This is coming out of the next downturn in VC. Corporate VC is going to make a massive comeback. The strategic value that a Brookfield, that a JLL, that a Hines brings to the table is too tremendous not to be leveraged in the appropriate manner. There are models like Fifth Walls that are helping facilitate that, but corporate VC is going to become much more powerful in the future. The other important points to make here are also the risk profile of tech. specifically related to real estate tech. Because real estate's such a late adopter, it has a very unique real estate tech underwriting profile. What constitutes innovation in our space is very lightweight. Because you're competing with Excel and physical ledgers, any technology idea is usually a good one. The problem is distribution risk. What technologies are going to be adopted and by who? And there's a herd mentality. We see it all the time in real estate. So if and when a technology does become successful, you tend to see everybody else pile in. So if you could solve the distribution risk, you could potentially create a really interesting investment model. And I'll talk more about that in a second. Here's sort of that bastardized kind of amalgamation of different numbers. $2.6 billion went into real estate tech last year. Again, focusing on this is R&D for your space. Get involved and start taking advantage of it. Here's just a list of some of the 21 unicorns. A unicorn is defined, you see it in the media all the time, as a company with a greater than $1 billion valuation. One of our portfolio companies, Open Door, hit that mark last year. A lot of these are actually companies based in APAC, but a few here are based in the US as well. It just goes to show the diversity of opportunities as well. Each one of these companies pretty much does something very different. And you're only going to see more unicorns over the next 12 to 24 months. A little bit more detail on Fifth Wall. So I mentioned that risk profile that real estate tech brings to the table. The strategy my partner and I pursued was something that we thought we could leverage to essentially effectuate that in a different way. We figured, hey, if the biggest risk in real estate tech was essentially determining what the biggest owner-operators were going to do, why not convince all of them to come into a fund and invest? So that's what we did. We picked a major logo in each industry vertical, convinced them to invest in a venture fund, which was no easy task, but we ended up figuring it out. As you can see, we control a significant amount of real estate supply, which only helps our position in the market. And again, Brendan and I had a very unique career in having worked in both real estate and technology, which I think enabled us not only to convince people to give us money to effectuate this strategy, but also gives us the ability to, I think, underwrite real estate risk and technology risk in tandem. One specific part about my background that I think is relevant, that I think showcases what happens when real estate tech, what happens when real estate and tech collides, is what happened in Invitation Homes. So back in 2012, a couple guys and I got together and founded a company called Invitation Homes. We were lucky enough to convince Blackstone to back us. The thesis was simple, and I'm sure everyone in this room, being real estate experts, saw it as well. The single-family housing market had crashed. Single-family homes were trading in a massive discount to market, a massive discount to replacement. Every metric under the sun, they were trading at a discount to. What do you do in that scenario? We thought we could aggregate a lot of homes, rent them out, and build a massive property management platform to effectuate that. We pitched this idea to everybody under the sun. Everybody understood the real estate dynamics of that. We were looking at single-family homes trading in Atlanta in the northern suburbs and Alpharetta at a 28% gross yield. How do you do that? How do I spend billions of dollars, $60, $80, $100,000 at a time? Everybody said that's one of those life's too short kind of problems. We don't want to deal with it. We said, hey, we think technology can solve it. The only difference between Blackstone and their competitors was that they bought into that. And the only thing that allowed us to buy 85,000 homes in 5 years at Invitation Homes was technology. Programmatically identifying, diligencing, and buying homes, not from the GSCs, not massive 1,000 data tapes. We were literally buying these things at the courthouse steps, one asset at a time. And then how do you manage those homes once you have them? Easy to understand how a vertically stacked multifamily building works, but when you lay that on its side and spread it across a region, how do you achieve the same operating margins? Technology. Really, it was just the mobile phone. That's what did it. So again, it's a real-world example. I mean, we went public last year in 2017. Now we have a $12 billion market cap. That's a venture outcome in real estate. And we essentially effectuated and institutionalized an entirely new asset class overnight. That's going to happen again and again and again. So having an opinion on technology is going to put you in a position to recognize that opportunity, most importantly, but then ultimately execute on it. Here's just some stats. I won't bore you with them, but we've done a lot of work. It seems like our anchors like us so far, which is great, including Charlie. And the most important stat on here is, I think, the number 36. So 36 game-changing commercial partnerships launched within 6 months of our investment. That's what we do. And that's pretty much all we do, is we help our anchors think through and strategize about their technology initiatives and then help them effectuate that in the VC ecosystem and then drive those partnerships home. This is not easy to do. It sounds easy, but obviously working with large corporates, it's not necessarily their money that's important, right? Because all these guys have lots of money. It's their time and their resources that are important. And if I'm going to take time and resources away from a Heinz, you better do a good job. And these partnerships better work because a lot of this stuff that we do is premised on delivering a value proposition that we spend months trying to figure out. So this is part investment banking, part consulting, and part venture capital, all wrapped into one. Here's some examples. We've got plenty of these, and I'll walk you through them. Here's kind of the mission statement, right? Fifth Wall helps our strategic anchor LPs identify, evaluate, diligence, support, and ultimately introduce and challenge. We're not in the business of telling Charlie, for example, everything he wants to hear. Like, hey, let us do what you do better. We're also in the business of telling him where we think his business is struggling or we think he's going to get disrupted. And that's part of our ethos as well. Some examples of how we effectuate partnerships. One of our major anchors is Lennar, the largest home builder in the US. We went to the CEO and said, hey, listen, we don't think Lennar is going to be able to get back to the 30,000 housing starts they had pre-recession. So we have an idea. We found a company called Opendoor. Opendoor, if you haven't heard of it, is essentially just a liquidity market platform for trading residential housing. You go on their website, you type in their address, they give you an instant offer, all cash on your home. You can close in as little as 3 days with no contingencies. They immediately flip that home, and right now I think on an average 30 days later. So the idea with Lennar was, if you're not going to sell 30,000 homes, new homes next year, why don't we figure out ways to get your existing homeowners to sell their existing homes and then buy new Lennar homes? Or why don't we convince someone who's in a non-Lennar home to trade up into your Lennar home based on a life event? They had a new kid, they got a dog. So what we did was we created a trade-up program. We launched it in Vegas, and now essentially Lennar goes to all their existing Vegas Lennar homeowners and say, hey, we've re-underwritten your home for an extra $6 a month. We can put you in a brand new Lennar home with an extra bedroom. Click here to buy. And they literally move them in the next day. As you can imagine, people love this, and they're trading homes in ways they never thought possible. Lennar also came to us and asked us to help them think through their mortgage process. They own Eagle, which does $13 billion of mortgage originations a year. They wanted better customer service and a cheaper loan. Blend is an amazing software that's helping large banks and now home builders to essentially manufacture loans cheaper using software and creating better customer service engagements. We ran a massive RFP with everybody in the space. Blend actually won. We effectuated partnership, and now Blend's being rolled out across Lennar's entire portfolio. We did a similar initiative in the co-working space with Industrious, as well as Beta, which is sort of a retail as a service provider. They're actually in almost, I think now 100 Lowe's locations selling smart home technology to Lowe's customers. All these things required venture capital experience, but it also required a lot of commercial partnership negotiation and structuring, which led to great deals that's driving value both for our anchors and for our portfolio companies. I'm not going to bore you with each one of our companies. I'll just slowly go through them. I just wanted you guys to get a sense for the breadth of opportunities that we're looking at. This isn't real estate tech, which is why we don't call it that. We actually call it built world technology. We are invested in everything from pop-up stores to retail as a service to AVs and construction to distributed, to on-demand self-storage companies, to fitness booking platforms, property management, energy efficient software, blockchain technology, co-working, home insurance, dockless bike sharing. We can talk more about that and why that's related to real estate. Logistics platforms in Brazil, distributed hospitality brands in the short-term rental space, online notarizations, commercial, next-gen title insurance, that's one of our coolest portfolio companies. WiredScore, an awesome company in digital connectivity certification. VTS, which I'm sure most of you know. And then some more white space accelerator programs that are looking to turn real estate into energy generating utility assets of the future. Essentially cord cutting companies like Honest Networks that are essentially building a next generation ISP and essentially taking all the economics that Comcast takes and just giving it back to the real estate owners. A lot of different strategies, but as you can tell, each one of them was done with a specific LP in mind. Here's the landscape, and this is just a spattering of all the different types of strategies that Fifth Wall looks at, pursues, investigates, invests in, et cetera. It's pretty varied. A lot of it, you guys could sit here and argue with me that this is nothing to do with real estate, and why are you looking at it? I can come back and I could probably argue the counter one, but most importantly, and I think the takeaway here is that real estate is no longer about sticks and bricks. It is about the ecosystem that your real estate asset creates, and it's about monetizing the customer that comes through it. Real estate of the future is going to be fluid. I think we saw that before. And the only way you're going to be able to deliver that product in a way that the tenant wants it is by collecting the data to inform you how they want to use it. That sounds a little bit out there, but this is the future of real estate is so much bigger than just the vertical stack that we think how we think about it today. And I would posit that a real estate company and a technology in 10 years, there is no difference. If you're a real estate company in 10 years, you're also a technology company, and vice versa. And the winners in this space are going to be the ones that evolve quickly to realize that and then start to actually effectuate it. So I think the core of Fifth Wall, at least with our first fund over the last 2 years, was really focused on commercial, residential, retail, hospitality, fintech, data analytics. We have 5,000 plus companies in our CRM. That's mainly reflected by this growing sort of cornucopia of concepts and ideas that we think are directly related to the future of real estate. Some of them are just kind of shown here. We'll walk through a few specifics on the next couple slides. But as you can tell, this isn't just real estate tech. The future of real estate is much more expansive and connected in ways that we haven't really thought about yet, but we're trying to put together. Steve, blockchain. I got to it. Whatever you think of blockchain, and I'm not proposing to be an expert here. I've spent 12 months looking at the space, and I feel like I'm just regurgitating the same articles that you guys have all read. I've spent a lot of time with entrepreneurs in this space. I'm fascinated by blockchain. Keep in mind, I'm not talking about cryptocurrencies. We're not talking about Bitcoin. I'm talking about the rails that enable blockchain technology to exist, and the result of that for us, and I'll talk about it here in a second, is something specifically related to real estate. My grandfather at Christmas told me about the Bitcoin that he bought, and I realized that we were in a bubble. Bitcoin is something we can talk about later. The utility token aspect of this stuff, I think, is very not relevant anymore. The future of blockchain is in security tokens. And why that's important is that security tokens directly affect everybody sitting in this room. If what some of these entrepreneurs think is going to happen, it will completely change the way we think about capital markets and will essentially create more liquidity in real estate than we've ever seen before. Very exciting, very much in the first few innings, and why we like security tokens and how we think about investing in the blockchain industry is we kind of think about it like the internet. If you were investing in the internet in the 90s, you would much rather invest in Google, right? You want to invest in the companies that are building the rails to enable the internet versus the companies that are actually using it. A lot of these utility tokens are just using the blockchain. We want to essentially invest in the companies that are actually building it. And Harbor, one of our investments, you might have saw in that launch, there was a news announcement about them a couple days ago, is our first investment in the space, and we're really excited about what they're doing. Building management and energy efficiency, otherwise known as smart buildings. I hate using smart buildings because I think if we went around this room and I asked you what a smart building was, everybody would give a different answer. I think we're still working on what smart building technology means, but for us, it's really been focusing on energy efficiency and using that energy efficiency not just to run the building better, but to actually provide insights and to provide insights that we can generate and feedback to the customer to make them more comfortable, more efficient, et cetera, with their space. NTIC and Enertiv are two of our investments in that space. Both one enables energy efficiency for smart buildings with BMS systems. The other one does it in essentially dumb buildings without BMS. Space utilization. This is one of the hotter topics at almost all of our strategic anchor LPs and pretty much the broader industry. There's a lot of different ways to cut this, but the most important thing here is a lot of these companies, as we talked about before, are going to completely change the form and function of how you sell your space. And if you own an office tower and all of a sudden your tenants come to you and say, I only use 60% of my space and I want to give a bunch of it back, that can have significant ramifications for the value of your building as you try to lease that space up. So having a strategy to tackle that, I think, is super important, and there's a lot of companies that are focusing on that right now. Workplace as a service. We view this as sort of an ecosystem play. WeWork's already at it. Make no mistake, WeWork is coming after everybody in this room, whether you're a real estate owner or a broker. They're coming after you, and they're doing a decent job of it so far, and they've got SoftBank behind them, so they've got a lot of capital, so they're not going anywhere. I know their valuation may seem crazy. It ultimately doesn't matter because they're well capitalized, and they'll survive whatever downturn comes next. So if you think they're going away, they're not. They're here to stay. They might oscillate a little bit, but they're going to be around, and they're going to be betting on this model, which is co-working is just essentially a launching pad to build a bunch of other services to monetize the tenants that exist in their space. And we view it the same way. We think investments in Convene and Industrious are a great foundation with which to add on additional technologies, because what really co-working to me is essentially a physical sandbox within a building to test out new ideas, because those are the tenants that are going to be most excited about new concepts. And if they work there, you could just essentially blow it out in the rest of your building, which I think creates some pretty interesting opportunities. So there's a lot of different categories in this space. I'm probably not counting them all. But this is a space that we're really enjoying. We've actually been working a lot with Hines on and Brookfield, so we're excited about it. This is sort of tech and innovation at the structural level. These are sort of like the spaces that might not get as much attention, but actually have some pretty interesting applicability. We talked about a lot of these companies in prior conversations. Security and access is a big one. You hear a lot about tenant engagement applications. It's our humble opinion that the issue with tenant engagement, and I know there's one company here that does it, is really about access. You're not going to log into a tenant app unless you have to, honestly. And the only way you're going to do that is if you need to use it to get into the building. So we think tenant engagement starts with access, and then it grows from there. And a lot of these companies are thinking about how to leverage that. Retail we're experimenting with. We love retail, by the way. I know everybody thinks retail's dead. It's just evolving. We're going to invest heavily in the retail space. We think the advent of digitally native brands is exhilarating, and for anybody who's thinking about the future of retail, digitally native brands are going to flood physical locations. You're starting to see it drip in, but there are thousands more digitally native brands behind them. There's an asymptote online where it becomes ineffectual and expensive to continue to acquire customers, and they're starting to realize that the only way to continue down that path is to actually go into physical retail. So you will be getting lots of phone calls from lots of companies that you can curate because there's much more of them. It's not the same 30 tenants that we've seen for the past 30 years. There's thousands of brands that you can actually cater to the ecosystem of customers that you support. You should use data to help drive that. Data analytics. I always get asked about data analytics. Let's be honest with ourselves. Most of us don't even know where our data exists in our organizations. Let's fix that first, and then we can start talking about AI and machine learning. The most important thing, and everybody, I was an analyst at Tishman and Starwood Capital, and the whole thing was, right, garbage in, garbage out. Right now there's a lot of garbage data out there. It's structured, it's unstructured, it's everywhere. Build your data lake, structure your data, and then start to draw insights. Until you do that, all this stuff is going to be worthless. So don't buy it until you actually figure out what you have. Modular real estate. This is in its infancy. I don't think there's any company right now that can deliver on the value proposition that they're selling. The cost is too prohibitive, but man, when somebody figures this out, this is going to change the cost profile of developing real estate in an incredible way. Manufacturing, homes, commercial assets, et cetera, there's a path forward there. Katerra is in the lead, and if you've ever seen their deck, the vision is mind-boggling. Whether or not they can do it, I think it still is yet to be seen. But there's something very special going on here. It's not ready yet, but when it does come into adolescence and eventually adulthood, this is going to change our industry. Drone technology. Drones had a heyday, and then now they kind of saw the fervor around what drones could do, especially in real estate, drop off, and now you're starting to see it come out of the doldrums and pick up again. The technology, everybody focused on hardware initially. That was a mistake. A lot of these companies are pure software. The insights that drones can give your real estate asset, your construction, whatever the application is actually becoming pretty real. So we're excited about the future here. We haven't made an investment yet, but we're looking very closely, both from a real estate and insurance perspective. Robotics, very early innings here, but there are definitely some companies that are doing some interesting things. AVs are obviously a massive topic in our industry. I talk about AVs a lot at conferences, and it's of my opinion, and we don't have to get into it now, that autonomous vehicles are literally a meteor headed towards our industry, and they're going to create and destroy more value in real estate than we've ever seen in the past 100 years. I'm not smart enough to tell you how that's going to happen, but it will happen, and it will happen faster than you think. And so we're very focused on that, both from an investment but also an advisory perspective. The one bet we've made in this space is Built Robotics, which is essentially AVs for construction equipment. Not as much regulation on a construction site as there is on a road. This is essentially doing grading for large-scale home building sites. It's a small autonomous bulldozer that literally can work 24 hours a day, 7 days a week without stopping. It's super cool, and it literally grades to like the millimeter, and a significant cost savings associated with it. Residential technology stack. Lennar is one of our anchors. We've done a lot of work for Lennar. And the reason being is that Lennar has traditionally been a home builder. They've built a ton of interesting businesses alongside them, sort of Natick, Eagle Home Mortgage, all reinforcing their core business of manufacturing homes. When we looked at Lennar, we saw an opportunity post-sale. Most home builders spend all this time and energy finding a customer, sell them a home, and they never talk to them again. Amazon, Google, Apple, everybody's trying to get into your home. Lennar is the gatekeeper. They have access to more homes than most. So why not build a real platform with which to monetize that customer well beyond the point of sale? And there's lots of ways to do that. There's also efficiency associated with a lot of processes in the residential sector. I'll focus on one, state's title. So I'm sure everybody here most people here have probably bought a home at some point in their life. You've probably had to get title insurance. Many of you probably didn't know what title insurance was until someone told you you had to get it and to close your mortgage. And then you find out what title insurance is and you realize that's not insurance, that's a bribe. They come to you and say, hey, we know there's no lien on your house, but you got to pay us for the pleasure. That seems crazy. And the way they do that is they have armies of people that physically check the records to verify that. The claims rate on a title insurance policy, less than 3%. You can throw darts at a board and probably make money in that space. All state's title does is use actuarial underwriting to instantly underwrite a title insurance policy. So literally within milliseconds you can get a policy. Mortgage lenders love this because they can write mortgages faster. Yeah, their claims rate might go up, but it doesn't matter. They don't have an army of people that they're paying. They just have technology. Fannie and Freddie are signed off. They're live in 3 states, and they did the first essentially online instant underwriting of a title insurance policy ever in Phoenix last month, and the refi loan closed in 6 days. That's incredible. Last but not least, warehouse last mile logistics. We talked a little bit about this before. We made one investment. We were looking in the US. There's a lot of cool companies here, but our infrastructure is our infrastructure needs a lot of work, but compared to the rest of the world, it's pretty advanced. And e-commerce penetration is mature, not super mature, it's about 12%. In Brazil, it's less than 5%, and they have no infrastructure. So what Logi does is essentially it's a parcel delivery service, is essentially bringing last mile and next day delivery to Brazil to help essentially take advantage of the increased demand for e-commerce in Brazil. And they're building a really cool company, which we're excited about. And that's it for me. So would love to take any questions. I know I just went through a lot and I'm probably talking really fast because I'm trying to be cognizant of time. But any questions, would love to talk through them with you.
Questions? Do we have any questions? Questions? Yes.
Yes, sir. Yes, hi. I've heard you say, yes, thank you. I've heard you use this expression about the meteor that's heading towards the commercial real estate industry.
Yeah.
What is that?
Well, I said that before, it's AVs. So, like I said, AVs. And I know I said I'm not smart enough to tell you how that's going to happen, but
autonomous vehicles.
Autonomous vehicles. Let's do a quick exercise. I invested in Clutter. It's an on-demand self-storage company. What does it do? It comes to your house, it catalogs all your things, it packs it up, and instead of storing it at the public storage down the street, which I'm sure if anybody's been there, you realize how much of a nightmare that process is. You rent a truck, you put all your stuff in boxes, you kind of like walk gingerly by the homeless guy that lives in the unit next to you, and then you put all your stuff in a square container, which doesn't make any sense because your stuff doesn't really fit in a square container. Like you've got a grand piano, a surfboard, and a bed, it's weird. So Clutter comes, they, like I said, categorize all your stuff and they store it not next door but far afield for a significant discount. And instead of putting all the mattresses and your stuff in one room together, they take the mattresses with everybody else's mattresses and they stack them. So it saves space. So again, they're saving space, money, time, efficiency, and they're delivering an on-demand product, which is how consumers consume stuff anyway. And what makes that so interesting is that if you imagine a world of driverless cars, why the heck would there ever be infill self-storage units? Why does Manhattan mini storage exist? You're essentially paying a premium rent for the fact that Manhattan mini storage should actually be a condo tower or a multifamily building. Why wouldn't you just take that stuff and store it in like way out New Jersey for nothing? Because you don't need your stuff now. You can get it in 12 hours, and you can pay extra if you want it now. So just a good model of like, hey, AVs are going to change what the form and function of real estate really means.
Michael lives in New Jersey.
Yeah, so there's going to be a lot of all my stuff's going to be there.
Other question, one more question. Yes, sir.
So I know with the blockchain, and it's hard for people to wrap their heads around it. So could you tell me how's that going to change the real estate industry as a whole?
Sure.
I understand that there's a company called Proppy where it's going to eliminate a third party to do a transaction, and typically, it'll just be peer-to-peer in that aspect.
So again, and this will take a long time, so I'll try to do a quick overview. So Proppy, those are utility tokens. So those are tokens that they're selling you essentially for a service and/or product. A security token is essentially the same way you think of a share in a company. It's literally just a security. Like when you buy a property and you get the security in that interest, it usually comes in a piece of paper. In this environment, it's going to come as a token. And with that token comes essentially code embedded in it that does all the regulatory compliance that typically happens in a real estate transaction. AML, anti-money laundering, KYC, all the things that the SEC would require of that transactions are embedded in that token. So how does that apply to real estate? So let's say I'm going to use Brookfield for example. I'm not saying they're doing this, but say you're Brookfield, and you own an asset, and you've owned it for a really long time. And maybe it's an illiquid asset that nobody really understands, and you want to monetize a portion of it. You can essentially use that security token, parse out 10, 15, 20, 30% of that asset, and do what essentially called as an ICO. And doing that ICO, you essentially can access the entire universe, whether it be crypto universe or fiat universe, and sell that percentage interest in that asset. The interesting thing about that is that post that sale, after a 90-day sort of freeze out, those interests can trade anytime they want. That's a fractionalized ownership that literally can trade at will, and all of a sudden you're creating a massive amount of liquidity for your asset that didn't exist before, and you're accessing an entirely new universe of real estate investors because they don't need to buy $30 million, they can buy $3 of it. Or if, let's say you're sensitive to the fact of having 200 people on your capital table, you can build what's called a whitelist embedded in that security token that only lets in LPs that you want in. Or it has a profile of LPs that can only be let in. So it's essentially the same thing that happens today. It just happens instantaneously on the blockchain, and it's infinitely auditable because everything in the blockchain can be tracked. So there's a lot more nuance to it than that, but it's really about essentially opening up a ton of liquidity based on creating a true liquidity platform for secondary and fractionalized ownership in real estate.